Well, welcome to the Crypto Trading Mastery Training video on Candlestick Basics. In this video, we'll cover an overview of how to think about candlesticks. So let's start with the disclaimer as we typically do. I'm not a financial advisor in any way, shape, or form. Anything I say about live trading, cryptocurrencies, anything in general should not be taken as financial advice. You should form your own opinion. Everything I say is my own opinion. You should do your own research, and I am not a financial advisor. So let's jump right in. Let's talk about what's going to be in this session. So in this session, we are going to cover a brief history of candlesticks. Now, even if you know what candlesticks are, in this session, we'll cover a basic overview of candlesticks, but I will actually, the goal here is, even if you're new, even if you're experienced, to give you some new ways to think about candlesticks. If you're brand new to trading, then this will be a great introduction. If you already are very familiar with candlesticks, hopefully what I have in here will give you a new way of thinking about them. And as we move forward, I think it will, because I just know that a lot of the books don't even cover how all of these things connect, even if you're just reading books and just going through that. So, and finally, like I said before, we'll be covering how to think about what candlesticks represent. So a good place to start, and look, I could spend 2 hours here on the history of candlesticks. I love history. I love studying history, and I get it. This isn't the History Channel. I mean, if we were talking about some antique item found by some ice road trucker, moving a load of timber cut by some serious men with chainsaws, that was probably left by ancient aliens that ultimately gave Hitler power, I mean, you'd probably be interested, right? But once again, this isn't the History Channel. But what we are talking about here is these candlesticks that were developed in the 1600s by Japanese traders. And they use these candlesticks to trade rice contracts. And a real interesting thing about this time is up until about the 1710s or so, they were only trading physical rice, but they actually developed the futures market. So they started trading what are coupons and basically created futures trading. A really interesting time in history. And one of the most fascinating people that you find in this era is Mr. Homa. Now, he basically mastered candlesticks. You can look at him as the Warren Buffett of his day. He's widely considered the father of candlesticks. He traded rice contracts in Osaka, and he discovered, and I should mention, he made a cool 100 billion back in his day. He's been seen as basically the guy that is one of the most successful traders in history, right? And he discovered that there was something interesting, that the market of rice, the reality of the numbers, didn't match what was happening in, or I should say the reality of the harvest didn't match what was happening in the actual market. And there was times when the market perceived a harvest different than what it actually was. Now, he learned that studying these candlestick charts, he could learn the emotions of the market, and it could help him predict prices. He understood that there was a difference between value and price. It's the same way today, right? I mean, that was rice. But right now, there's a difference between value and price in stocks, cryptocurrencies, all the above, right? Now, he also created the book, or wrote the book, The Three Monkey of Record of Money. And it's really considered the first book on market psychology. And in it, he talks about how the psychological aspects of the market is so critical to trading success. And that understanding traders' emotions will help you understand the movement of prices. You know, like I said, I could go on and on. There's a lot of insight into what he was able to do and how he figured this out and how he was able to trade. One of the things that we'll get back to here is he actually discovered something years ago that investors still have a challenge with, which is he started using trends, but then he also was using the weather and market volume and adopting how to change his trading position accordingly. There's so much genius in what he was able to do before computers, before really the analysis that we have now, that, like I said, we could go on for 2 hours of the history lesson, but it really is a kind of a statement of what we're going to talk about here, which is candlesticks, which is that even with a simplistic kind of technology, you can make a lot of money with just a little bit of information and an understanding of human psychology. And really your goal, one of your goals as a trader, is being able to master the study of candlesticks and the story that they reveal. Because that's what happens. Basically with candlesticks, they reveal the story of what happened, the fear, the greed of the market. And the best way to look at how you should do this or how you should go about this is that you have to get your mind to be unconsciously competent, meaning that you don't even realize that you are competent in this, to a point where you can see a single candle and know the possible actions the market participants took to make that happen. This only comes with practice. It only comes with exposure. It's not just one candle too, but we'll get into that in here in a second. But basically, your goal should be, and this is such a critical thing because candles represent the information and the emotions of the market. So understanding how to properly read them and properly understand them and properly see the fear, the greed, and everything in between is so critical. So let's get into candlesticks a little bit. I'm sure most are familiar with this. A candlestick, the modern version of candlesticks, there's a couple different versions, but we'll just cover the ones that are in color and like this, which is basically a green candle. Or let's just cover a candlestick overall. Overall, candle has what's called the wick, which is the upper part. It has a body, and then it has usually sometimes a lower wick. And a candle that represents any time frame, right? It could be 1 minute, it could be 1 hour, 2 hours, a day, a week. If it closed higher, then the open would be at the bottom and the close would be at the top. And then the wicks are where the price got to the lowest and got to the highest. And it's the reverse on a bearish candle. Obviously, it opened up top and then it closed down below. And I'm covering this very loosely because I think most people probably understand this at a base level, right? And they probably get this. The key here is just imagine or just look at how much information this conveys. How many other things that you have experience with, I should say, that convey this amount of information about anything in this kind of little bit of graphic, right? You have the highest the price went, the lowest the price went. You have where it opened, where it closed, and all of the emotions in between. And I know I'm talking at a higher level, but if you understand how each one of these candles can be formed, you can see how the emotions are playing out. I should mention you're only getting half of it, but we'll cover that at the tail end of this video. So, one of the things to keep in mind with candles is that there's many different names. There's like the engulfing, the hammer or hanging man, shooting star, doji, spinning top. There's many different names, okay? And there's many different patterns, right? There's the bullish engulfing, the dark cloud cover, the doji, the two lows, high close, right? There's many more than this. This is just scratching the surface. And anybody that's probably studied candlesticks, if you've done any study at all, you know that there's a lot of different patterns. There's a lot of different names. There's some that you really should know, right? That's what usually people say. Here's the bottom line. Learning these names is really the wrong place to focus. And what you want to focus on is learning the data, the market action, and the emotions that these reveal. I have said this before in videos that some of the best things that you can do, or one of the best things you can do, is actually just sit and watch a chart on 5-minute candles or other candles and just watch things kind of unfold and see how candles are formed. Watch the market in action. Watch it go about doing what it does. Watch people greed and fear and everything else in between and watch how that happens. That's something that is invaluable. A lot of people hesitate that because it's boring, but you actually get to see the real market in action. Now, obviously, in your study of candlesticks, knowing these common patterns and names are important, because then when you're talking about them, you can visualize it in your head. So I'm not saying it's not important, but a lot of times people go on the path of actually memorizing these things and using these one names and saying, oh, here's a shooting star, that means I should do this. Wrong way to look at it. Those are just names that people have given these candles. You should always think about not necessarily what the name of the candle is, but what the candle represents, right? The emotions behind the candle is what you should think about. Now, when we talk about price action, oftentimes you hear price action, right? And price action is the action in a individual candle. It's also the action that happens over the course of a chart. Price action is kind of one of those interchangeable things. It's kind of like ciao in Italian. I don't know if it's like ciao in Italian, but ciao in Italian can mean hi or goodbye, right? I'm sure there's other words that I probably could get a better example of, but price action is kind of like that. You could say I'm watching the price action on the 5-minute, or this price action this hour doesn't look good, or this price action this day doesn't look good, or it looks great, or the price action today is really confusing, the price action on the 4 hour is really confusing. You can use it interchangeably, right? So when you hear price action, the way I use it is that I'm actually watching physically the order book, and I'm watching how candles are forming and rejection and all types of things. So I use price action as more of a verb, I guess you could say. I don't know if that's the right way to look at it, but to me, that's the way I use price action. I also use it in this way, where I say we have a chart like this, and I say, well, let's discuss the price action of this asset, right? So I use it interchangeably, but generally that's the way it works. So when you hear price action, that's what it means. Now, one of the most important things, and I've said this again, and I'm going to re-emphasize it, is reading the emotion of the market is critical to making the right trading decisions. Okay? Even if you're in a market where there's a lot of bot trading, for instance, those bots were designed by people that had emotions or tried to get emotions out of trading. But you're still going to read the emotions of the market because obviously they were set up by people to minimize risk, to make smart trades. I just mentioned that just because that's often one of the arguments I get from people when I talk to them is that, well, how do I read the emotion of a bot? Well, it doesn't matter. The bot was created by someone. Until we get to the point of artificial intelligence, which we probably maybe almost are already there, right? Maybe we've already created that's another talk for another discussion, so I won't get into that. But let's just say that we've created artificial intelligence already and we don't know it, okay? It's kind of my argument, but let's say we did. At that point in time, then maybe you could say there's a new life, and then reading that emotion probably would still play out as well, because if we created artificial intelligence, they would have a whole new level of adding emotions to the market, right? But that's the key. The key is you need to read the emotion of the market. And I'm really hammering this down because, especially in crypto, at this given time, emotions play such a critical role. And it's going to be a very immature market, I think, for a while, where there's opportunity. And the best opportunity is going to be captured by the people that understand human emotions and can read the data that the human emotions are providing and trade off of that. Now, reading price action matters in trading because it covers everything. It covers where do you enter a trade. And one of the things we'll cover later on is that that's not the most important part, believe it or not. When do you exit a trade? A lot of times you're in a trade and you want to maximize your value, and this is the hardest thing to do. I still have challenges with this, is understanding, is there more room in this trend? Or is this just a simple pullback? Is this pullback going to just pull back, breathe, and then continue, right? So knowing when you exit a trade is also an important aspect. And when a trend might be starting or ending. Trend trading is still one of the best ways to trade, and being able to trade with a trend or a counter trend is important, but being able to read price action will, especially it will give you a leg up on that, especially a lot of things we're going to cover in the next couple sessions. Whether or not an asset has a probable pattern, you can trade. So a lot of times you'll get to a chart and you'll look at it, and once you can really read price action well, you'll realize that there's a high probability that you shouldn't trade this, where maybe before you might have because you liked the project or you liked something else about it. But you'll be able to look at it in a different way and say, this doesn't have a good pattern for me to trade, and if I do, then here's how I'm going to trade this, right? So you'll change your trading style based on understanding how to read price action in a probable pattern basis, and whether or not the market participants respect value. You can get this from price action. And think about this for a second. There's a lot in this sentence, but basically what you're really looking at is, do the people that are interested in this, do they respect the value of this thing time and time again? Or is it just something thrown away, right? And you can see charts where obviously the thing's just thrown away. Who knows what it's used for? It's just thrown away. It's just used for trading, right? And being able to read price action properly will help you trade that as well, or not trade that. So reading price action and candlesticks and the emotion of the market is so critical. That's why this is one of those foundational things, in addition to reading your emotions or controlling your fear and greed and your emotions, is critical to trading success. We'll be covering this in more detail, but one of the things you should always keep in mind is that usually there's an important part of a candle, okay? Usually you're looking for the important part of the candle, and in engulfing, there's no wicks there. Sometimes it's called shadows. There's no wicks, so obviously that's an important part. In the hanging man, oftentimes that pattern is the important part, but actually the important part is the wick. Same with the shooting star. Same with the spinning top. The spinning top is more the body, but you'll see here as we move forward why these are actually the most important parts. But there are important parts of a candle you should be looking at, as opposed to just reading the chart. Oftentimes, what you're looking for at just a glance is the important part of a candle. And this also plays into kind of the second biggest mistake that new traders make, which is there's the shooting star. And oftentimes, new traders, they'll look and say, well, the shooting star means there's a reversal, because they'll see something like this, or the hammer. Well, that means the trend's going to start, and it's going to start going up, right? And they'll trade off that. And Bitcoin loves to do this. They just love to show the shooting star, loves to throw the hammer, right? And oftentimes you'll see the hammer, but then the hammer actually, deflates. That's because focusing on a single candle and not the story of the chart, not the price action, is the biggest mistake that new traders make. They look at a single candle and they say, okay, this is the start of a change. But here's the way to look at a single candle. Anytime you see a single candle on any time frame, okay? I'm going to give you the secret of this. This is something you should always be mindful of. If you have something that you put up on the board or in front of you when you trade, you should put this up, which is basically any signal you see. And a candle is a signal, okay? A candle pattern is a signal. It's a warning sign of an impending change. And what that means is not to act. It means to be patient. That's what it means. So when you see the hammer, for instance, we go back, you see the hammer, that doesn't mean to act right away. It means be patient, look for confirmation, do other technical analysis, but don't act. The biggest mistake that new traders make is they see a pattern that they recognize. Now, obviously, as you get better and better at this, you'll start recognizing patterns and then you'll know when to act, right? But the biggest mistake new traders make is that they learn kind of this new world of reading charts, and then they see the shooting star and they immediately get out of the trade, or they see the hammer and they immediately get out of the trade. You have time, okay? This is something to think about. Look, the market, it doesn't change on a dime. Think about it this way. When a shower of rain stops or it starts raining, it doesn't just suddenly stop, right? Usually it gradually peters out, then stops. Or let's say that you spill something and you have to mop it up with a sponge. Now you take a first pass and you usually don't get it all, right? Usually it takes 2 or 3 or a few to kind of complete the job. This is how the market works. It's a sponge. It takes time to complete or mop up any market price action for it to turn. So that signal that you see really is the first drop of water when you're trying to clean it up. So you just spill something. That's the signal. So you spilled something. Oh, I'm paying attention. And, oh, I should clean this up. So you get a sponge, you wipe it. That's kind of the first action. And then, well, I didn't get all of it. I got to wipe it again. And now it's clean, right? It's back to the state it was before. And it's so when you're looking at price action, it works somewhat the same way. The market doesn't usually just turn on a dime. The crypto market sometimes does in certain ways, but in 90% of the time, what ends up happening is exactly what I described, is that you'll see a signal, and then what will happen is that the market has to mop up that. It has to basically gain momentum, and it'll continue in that direction. But then it mops it up, and then it moves into what that signal actually represented. Sometimes it doesn't. Sometimes it will continue in the direction that is opposite of that signal. And the final thing, or one of the final things here, is that this is just the start. Look, I'll be covering this more in detail. We'll get into charts and everything else, and I'll share with you the top tips and advice. But like anything else, study of candlesticks and market psychology should be something that should be top of your list if you really want to pull capital from the market, which you do. So I'll be sharing a list of top books that I think if you were just say, hey, read these 6 books on candlesticks and you're like 95% there, I'll share those 6 books. And the final thing before I let you go here in this video is I've only shared half of the picture, which is reading candlesticks without volume analysis is completely meaningless. And there's a lot of talk out there that only price action is all that matters. Only, being able to read candlesticks and TA and everything else only matters. And yeah, that can get you a little bit of ways. But if you want to really open up the inside of the market, understanding how candlesticks and volume correlate and reading those together will put you on a next level. And that's what we'll cover in the next video, is volume analysis and how to think about volume.